Welcome to Investing Guru channel, your go-to source for finance and market analysis. Today we're discussing a major event, Donald Trump's victory in the U.S. presidential election. This has triggered immediate and strong reactions in global markets. But what are the long-term implications for the U.S. economy and the world? We'll explore how the markets have reacted and what this could mean for the future of key sectors such as banking, automotive, technology, and even cryptocurrencies like Bitcoin. Stick around for an in-depth analysis. Upon hearing the news of Trump's victory, U.S. stock markets reacted positively. Banking stocks and tech companies like Tesla saw significant growth. This reaction from the banking sector is tied to the expectation of pro-business policies, with potential deregulation and tax cuts that could further boost the financial sector. In the past, Trump has expressed a desire to roll back certain banking regulations, such as those under the Dodd-Frank Act, to stimulate economic growth. This approach could increase profit margins for major banks, enhancing profitability prospects for investors. One of the most intriguing stories is Elon Musk's endorsement of Trump. While controversial, this support could open new opportunities for Tesla and Musk's other companies, like SpaceX and Starlink, especially if the new administration decides to focus further on advanced technology and space innovation. Tesla could benefit both directly and indirectly. On the one hand, there might be incentives for domestic production and companies contributing to U.S. technological leadership. On the other, Musk might gain privileged access to sectors like defense through SpaceX and Starlink, considering the importance of advanced space infrastructure for national security. Imagine what a closer partnership with the government could mean: more contracts, deeper integration with digital infrastructure, and possibly a stronger presence for Tesla in the U.S. automotive sector, with significant expansion of its factories and research centers. However, not everyone has reacted positively. In China, markets have shown a noticeable decline. Asian investors fear that a Trump presidency could lead to more trade tensions and sanctions against China. Given Trump's track record with China, we might expect tariffs and stricter regulations that would limit Chinese companies' access to the U.S. market or impose technological barriers. This could pose a real threat to Chinese companies like Alibaba, Tencent, and Huawei, who might face obstacles in their international expansion. Moreover, intensified competition in technology and finance could negatively affect Chinese companies' market valuations, creating volatility and uncertainty for investors over the medium term. Turning to Europe, we also see a positive response. European stock markets are on the rise, fueled by hopes of more favorable economic relations, with the U.S. investors in Europe may view Trump's more traditional trade policies as an opportunity to strengthen economic ties with America, especially in sectors like energy, automotive, and manufacturing. This optimism could lead to new investments in European companies exporting to the U.S., benefiting from greater stability in transatlantic relations. The European banking sector also appears optimistic, anticipating a possible strengthening of the dollar, which could ease exports. Expectations of potential infrastructure projects in the U.S. and increased demand for European products are boosting major stock indices in Europe. However, how Trump's tougher stance on China might impact the European manufacturing sector, which is particularly sensitive to global trade flows, remains to be seen. Meanwhile, Bitcoin, an alternative asset, has seen a surge. Trump's victory has created different expectations about the future of fiat currency and potential monetary and fiscal policies. Many investors see Bitcoin as an alternative and decentralized safe haven that could protect against geopolitical risks and currency instability. Bitcoin's rising value is significant because it reflects growing confidence in this type of alternative asset. Controversial as it may be, Bitcoin is increasingly seen by investors as digital gold, with the difference that it is immune to direct government and central bank influences. With Trump in the White House, institutional investors might increasingly turn to Bitcoin as a sort of insurance against global economic fluctuations. Interestingly, the price of gold has declined, a move partly explainable by renewed confidence in riskier assets like stocks and cryptocurrencies. It also signals that investors are considering new scenarios in which gold may no longer be the only reliable safe haven. If Bitcoin continues to be seen as a viable alternative to gold, we could witness a shift in long-term diversification strategies. Trump's victory impacts not only the economy, but also the geopolitical landscape. In the long term, we might see a reassessment of global alliances, with the U.S. potentially aligning more closely with countries that share similar trade policies and tightening relations with China and other emerging powers. These scenarios show that the coming years will be marked by significant volatility and many opportunities. The challenge for investors will be positioning themselves strategically, keeping in mind political risks and economic uncertainties. One thing is certain: this presidency will bring changes and surprises that could have a substantial impact on global markets. If you want to stay updated on how this event unfolds and how it will influence investment portfolios, be sure to subscribe to the channel and activate notifications. We'll be here to help you understand how these global dynamics may translate into opportunities or risks for your investments.